Why being self-employed is better when getting a loan. Think working for yourself puts you at a disadvantage when trying to get a loan? Think again. Hi, I'm Nathaniel from the Loan Lounge, a business focused on compassionate and highly entrepreneurial financial services that empower you to reach your goals. Let me tell you a story. I was at a gathering on a weekend and we were standing around nibbling on some food when, that conversation came up. The one where people ask you, what do you do for work? I told them all about how I'm a mortgage broker and I help people with loans, especially self-employed clients. That's when someone turned to me and asked whether banks purposely look down on self-employed people. And let me tell you, this is not the first time I've heard about this. People automatically think if you're an employee, you're at a higher level than someone who may be self-employed. That couldn't be further from the truth. And so I went on to explain that they both have their differences, but in fact, there are so many benefits to being self-employed. Why? Being self-employed means you pay yourself a salary, plus the profits from the business can be used to determine your borrowing capacity. Secondly, there's this handy thing called add-backs, which are basically non-cash deductions that you can add back to the loan and use as income. For example, if you have depreciation of $50,000 and $50,000 of net profit, we can actually use $100,000 as income. There are also add-backs like interest or additional superannuation paid that can be used as income too. But here is my favorite. Let's say we've just finished the financial year, it's July, and you are finalizing your tax returns. These tax returns can actually be used for the next 18 months. This means if you haven't found a property in the next 6 to 12 months, you can rest assured that the lender will still rely on your historical tax returns. Now compare this to an employee. In this case, the bank relies on your most recent payslip, which usually just lasts for about 30 days. So if you put a deposit down on a property, you lost your job or you suffered a pay cut, then your borrowing capacity would be affected straight away. But as a self-employed applicant, you can rely on historical tax returns to back you up. How good is that? So the next time you hear someone say it's unfavorable to be a business owner, correct them and let them know 3 reasons why being self-employed has its benefits. I'm Nathaniel from the Loan Lounge. See you next time.